Bharat Gianani now joins in to talk a little bit more about the auto sales numbers. Bharat, I'm going to start off with Maruti. We saw the biggest drop of nearly 40% in the mini car segment. There has been a shift as well to some of the models within the compact segment. How have you read into the overall numbers for Maruti? Do you think that this is some sort of an indication that demand recovery will still take time to pick up and the sluggishness is going to continue?
Yeah, good morning to the viewers. So definitely Maruti disappointed with about 20% drop in the sales if we consider the domestic market. So clearly there are challenges for the auto industry. Q1 already there is an uncertainty before the general elections, so that also tends to weigh down on the auto sales. But auto sector as a whole, if we see, there are challenges. Recent cost increases to comply with the regulatory norms of ABS and CBS for both two-wheelers and four-wheelers. Then we have after 1 or 2 quarters BS6 norms also kicking in. So that is going to see a very steep price hike across the categories of automobiles. So definitely recovery is still some time away.
Okay, so I'm trying to find some kind of bright spot in this overall scenario, and I'm struggling, Bharat. All the factors just seem to be adding up at this point of time. Whether it's the four-wheelers, the two-wheelers, is there anything that at all that's looking like it might still just be in line with expectations? Because, Maruti's really started with a significant miss. Eicher has been weak for some time now, so in line with expectations, but overall the tone is still weak, and we've also seen that happen with TVS.
Yes, so weakness I think still will continue. We saw the results of also auto companies. The impact of slowing volumes have had its impact on the margin as well. So most of the companies still now which have reported numbers, Hero MotoCorp, Maruti Suzuki, TVS Motors, we have seeing a decline on the margin front as well. So definitely the subdued volume will have a bearing on the margin performance, which will impact the earnings and the stock prices of the automotive companies. So we expect, given that FY20, we are not expecting a very significant pickup in the sales. We saw the SIAM forecast as well. The sales will be more or less in line with the sluggish sales in FY19, and if the election result does not turn out to be favorable, we may see a further correction also in the sales, and that will have a bearing on the margins as well. So right to say that pain points will continue for the auto sector for at least next 1 or 2 quarters.
But what do you do, Bharat, as an investor? Do you buy this decline because the market is already baked in the worst? Because, the monthly sales declines has lasted now for what, 4th or 5th consecutive month? For instance, for an Eicher, which is now struggling at its 52-week low, we've seen the stock getting clobbered from the top. While yes, the CV sales are still down 54%, there is not much improvement in RE, but is the worst already in the price for both Eicher as well as Maruti? Or do you sense there are worse days ahead for the stock prices?
No, I think worst maybe still some pain may be still left in both these counters, because if you see the numbers, obviously there has been disappointing. But if you see the valuation front as well, we are still not comfortable even after the stocks have been beaten out. Why I say this? Because I expect softness in the sales for both these counters to continue. Eicher has been definitely losing out to competition and clearly has been losing market share, and it may lose market share further. So there is a possibility that you may see still earnings coming down for Eicher. As far as Maruti is concerned, we are also of the view that it may not be able to outpace the industry growth because the competition has been very aggressive. Hyundai will launch Venue next month. Then we have a lot of collaboration and new products coming from domestic players such as M&M and Tata Motors. So Maruti will find it difficult to outperform the the domestic passenger vehicle industry. We have also Maruti will be busy to meet upgrade the entire product range to BS6 norms and complying with the recent regulations. So I think new product launches will not be there from Maruti side at least in this financial year. So we may see Maruti also not outpacing the industry growth, and PV industry we may still there is a risk of the industry growth getting slowed down due to the recent regulations and complying with the recent regulatory BS6 norms and braking norms. So still if the sales come down and both Maruti and Eicher are trading at premium valuations. So Maruti, if we see, is still trading at 23-24x FY21 earnings, and if the earnings downgrades, then we may not see the stock moving up. There may be still some pain. So definitely both two factors. One, there may be disappointment on the sales going forward, and second is the valuation is still high for both the counters.
Yeah, so speaking about that valuation metric, particularly for some of the four-wheelers, despite the fact that we have seen a little bit of pain when it comes to the stock prices, the valuations aren't quite playing catch-up or aren't compelling enough to dip in. So what does one do with the four-wheeler stocks?
So we had downgraded both Eicher and Maruti to 2 or 3 quarters back, and we continue to maintain cautious view on both the stocks. We need to avoid both these counters. Our view is hold as of now. In the four-wheeler space, we prefer M&M because M&M provides a valuation comfort. M&M is trading at about 11 times its core business earnings of the auto and tractor combined. So valuation comfort is there for M&M, so we prefer M&M in the four-wheeler space.
Okay, and what about the two-wheelers?
Two-wheelers, we are very cautious on the space. Apart from the volume trajectory, volume decline that that we have seen, inventory levels in two-wheeler space are still very high. So we may see further disappointment in Q1 numbers. Hero and HMSI have indicated that they will cut production by 15% in Q1. So there is still a lot of pain left in the two-wheeler space. We may see two-wheeler space to be very muted in FY20. Hero has indicated in the conference call that they might see a flat first half. So two-wheeler sales disappointment will be higher than the four-wheelers. This is our view. And another point which I would like to highlight is that apart from the sales pressure that we have, two-wheelers is seeing a kind of a pricing pressure because Bajaj Auto has been very aggressive with the pricing. It has to gain market share. So the pricing pressure, if we see in the two-wheeler space, is high compared to the four-wheeler space. This may spring a negative surprise on the margins as far as the two-wheeler space is concerned. So we feel that two-wheeler space has a double whammy in the form of slowing sales and on the top of it margin pressures. So all the three stocks in our universe we have downgraded. We have a cautious view.